All right, what's happening? Terry James, your mortgage guy, coming to you today. Want to talk about one of the things I wanted to talk about today was going to be second homes, what's considered a second home, and how does that work with my income, debt to income ratio, qualifying, some of the qualifications around a second home. So, one of the unique things about us buying a second home is number one, you're going to get pretty much the same. It's almost like buying a primary residence, essentially. So there's not going to be any extra down payment that's required, any extra as far as rate. Your rate's going to be very similar to as if you're buying a primary residence. Now, one of the things is that what people tend to do, and I've seen this a lot throughout the years in this industry, is that people will buy a home down the street from where they're living and they'll try and say, this is going to be my second home. So while that sounds good to take advantages of the primary rates, lower down payment, all that stuff, that is not going to fly. So when we say second home, you have to understand what that means. Essentially, you're looking at a home that is, in many cases, the lender is going to require that the second, what we deem as a second home, is going to be at least 50 miles from your current home. Okay. Now, Fannie Mae doesn't necessarily have that restriction on there, but a lot of lenders are going to have that overlay for the second home. You have to be so many miles away, proximity from your current home. And that's to prevent people from saying, hey, yeah, I'm just buying a second home and it's around the corner. And what you're really going to do is get a primary residence and then rent the home out. So that's what that's there for, is to make sure that you're not getting a primary, basically purchase and then you're really buying investment property. Now, Fannie Mae does have a requirement on second homes that it can only be one unit. So if you think you're going to buy an income producing property and, and put down 5%, that is not going to happen. Okay. So keep that in mind. Yeah, that's not going to happen. So Fannie Mae does have a requirement that it has to be one unit. You have to be able to occupy it year round. So if you can't get to it, for half the year, Fannie Mae does have that requirement that you have to be able to access it and occupy it year round as a second home. And so you may not go to it year round, but you at least have to be able to get to it year round. The other thing is that you can't have any timeshare. Of course, you can't have any rental agreements on the property. And then I know before we had talked about rental income and counting rental income. So on a second home, you're going to have to qualify completely without any type of income, because you can't have income you can't have an income producing property, or you can't receive income on a second home. So you're going to have to be able to qualify for that full payment, PITI, principal, interest, taxes, and insurance on the second home and your current home if you have any. And so just keep that in mind, how that affects your debt to income ratios and making sure you can qualify with the second home on there. But other than that, you're essentially talking, you can still do, in many cases, you're looking at anywhere from 3 to 5% down payment, depending on credit score and other criteria that's involved. Debt to income ratio also plays a part. And then buying a second home is essentially almost the same thing as buying your primary residence. Okay, so just keep that in mind, that as you are out, if you're thinking about purchasing a second home, a vacation home, those are what you want to consider. And that even if you're buying a vacation home and you think you're going to do an Airbnb, that is not allowed for purchasing a second home. If you're going to Airbnb it, that has to be purchased as a investment property. Okay, as a rental property. So even though you might Airbnb every now and then, if you're going to do Airbnb at all on your second home, it is going to be considered rental property at that point, which are going to come with different qualifications, different stipulations of what you need to do to get that, to put down on the investment property. The other thing too is that keep in mind, because I'm always talking about planning for the future. So let's say you buy the second home and you decide later, 6 months from now, you're like, oh, let me go ahead. I want to now flip it to a investment property or anything like that. Keep in mind too that when it comes to refinancing, or if you do anything with that home, once it's on your tax returns as a rental, that property is a rental property. It will not be considered a second home. If your tax returns show that you've received rent, if your tax returns show that you've been receiving Airbnb, I don't care how often it is, if it was for 1 month, that home will not be considered a second home because your tax returns state you rented it out. Okay, so know that for the future going forward. Like I said, we're always talking about planning. Keep that in mind, that if your tax returns at any point state that you receive rental income, when you go to refi it or to do anything with that home, it now will be a rental property. All right. So I hope you guys enjoyed this. As always, make sure you like, comment, and subscribe. Talk to you later.